If you are a small investor and you're frustrated with your search for a stock or an ETF that pays a dividend you can retire on or cover the bills with, well, I understand your struggle because I've gone through it myself. And today I'm going to share with you one single ETF that I'm using right now in my portfolio that's paying me $400 a week, every week. And when I tell you how little I've invested in this ETF, the number may surprise you, because today we're going over covered call ETFs, ones that use option strategies to generate monthly or even weekly income. Some of these are paying around 12, 14, 30%. Some are paying as high as 50 and 80%, like the one that I own. One mistake that I think investors of all sizes make is settling for like 4% or 5% yield. You know, your financial advisor might put you in like a bond fund that's paying 4 or 4.5%, or recommend some blue chip stock that pays 3% dividend yield and the price isn't going anywhere. And they don't really tell you, or they don't open the possibilities up to you of covered call ETFs, some of these newer products. And maybe it's not their fault. They might just not be aware of them, and that's where financial education comes into play. Because on CNBC and Bloomberg and the Wall Street Journal, you're really only going to see the headline stocks. You're going to see the big names, the ones that pay to advertise there. And so you get this kind of narrow view of what's out there in the financial markets, and you don't hear about some of the more interesting and risky opportunities that are out there to help you retire just a little bit early. Like, imagine if your financial advisor gave you a portfolio that's kind of yielding 4 or 5%, and all of a sudden you do your own research and you create a portfolio that's earning 10% or 12%. And when you sit down with your financial advisor, you kind of ask the question, hey, what am I paying you for when I can do the research myself? I can construct my own portfolio. So it may not even be in their best interest to make you aware of what's out there. But today I can show you guys what I'm doing with the income side of my portfolio with the one single covered call ETF that I invested in back in July. And like I said, it's paid me $400 a week consistently. In August, I made over $1,600 just in 1 month. And to get that kind of return in a normal fund, I would have needed like 10, 15, or maybe even 20 times more money to do that, which I didn't have to invest. So let's get into it. How do covered call ETFs work? You can think of them as two flavors. The first flavor are single stock covered call ETFs. So this might be something like NVDY, which is a ETF that only holds NVIDIA, and the portfolio manager writes covered calls on that single stock NVIDIA, generates monthly income, and pays it back to the shareholders. There are other ones like TSLY, which only holds Tesla. A very popular one now is MSTY, which holds MicroStrategy, but there are quite a few out there. The second flavor of covered call ETFs are ones that hold multiple stocks or multiple of the smaller covered call ETFs, so a fund of funds. And they operate the same way. They generate income through options writing. Now, what determines the income? How come some covered call ETFs pay like 12% and others pay 80%? Well, it depends on the volatility of the underlying holdings. An example of that would be, like I said, NVDY, the NVIDIA one. NVIDIA is a stock whose price goes up and down a lot. That's called volatility, and the more of that, the higher the options premium. Now, for a stock like Coca-Cola, for example, where the price doesn't move that much up and down, that option premium is going to be a lot less, and so that fund that holds it is going to generate far less income and distribute it less to you. What I like about the ETF that I hold is that it is one of those broader baskets. It holds about 30 very volatile stocks, but it generates a high income because each of those stocks has high volatility where the price is going up and down, and it's generating more option premium. Now, if you're new to this concept of covered call ETFs and some of that's confusing, don't worry. I've got more videos on my channel that talk about this. There's also a wealth of information on YouTube and Reddit and Wikipedia that you can find on how these work. And if you're new to this journey of creating another source of income through dividends, through investing, that's great too. Welcome aboard. I want to see every single person who's watching this find their own magic income stream that can set them free financially so that they can choose whether they want to work or not, or how much they want to spend each month. And I actually just began my own journey to create more passive income and get financial freedom. And it really started maybe back in July when I looked at a video on YouTube, and the thumbnail was basically some guy making, I think it was $700,000 a year purely off dividends. So I clicked it thinking, okay, he's probably got like a $10 million portfolio or something. Let's just see what he has. And it turns out he actually only had like $1 or $1.2 million. And he held it in basically 2 or 3 positions. And one of those was the ETF that I ended up buying, ULTY or ULTY. So I did as much research as I could that night, the very next day and that week, and I kind of just dove headfirst into it. I think I started with maybe $5,000 investment, and I ultimately got to about $26,700 invested in ULTY. And since then, I've been making about $400 per week. And I've also made a lot of videos about it, which you guys can definitely check out when you subscribe to the channel and explore that. And yes, the price of ULTY has gone down since I bought it. But what I'm using ULTY for is income. I don't plan to sell it. I plan to hold it so that it continually spits off and deposits that $400 per week into my account that I can use to cover grocery bills, to cover utility bills, to pay some of the rent. That's what it's there for. And so if you guys want to learn more about covered call ETFs and how they could potentially generate more income for you in your portfolio, I recommend that you check out my channel where I've got plenty of videos on these topics. I do comparisons between covered call ETFs. I talk about the concept of NAV erosion, which is a very hot topic in the covered call community. I give you news updates, and I share with you updates on my own journey in investing in covered call ETFs. So definitely check out the channel if that's something that you want to learn more about. Thank you for watching. If you guys did get value out of this video, give it a like, and if you didn't, that's fair too. You can leave a comment and tell me what did you want to see, what were you hoping to see, and we can cover that in a later future video. Until then, take care.